Hi, greetings of the day. This is Professor Ramakrishna. Welcome to my YouTube channel Archiversity and my website archiversity.com. In this lecture, I'm going to explain you how to prepare trading account and ascertain the gross profit. As you know, there are three key financial statements that we prepare. One is a trading and profit and loss account, and second one is a balance sheet, and the third is a cash flow statement. Instead of clubbing all the three into one and confusing the students, what I did is I am showing you how to calculate the trading account separately, profit and loss account separately, balance sheet separately. Then with the adjustments, we combine all these three and I'll explain lengthy projects or lengthy problems. And all the data that I'm using for calculating the trading account in this lecture are of a fictitious company, and randomly I identified the variables and or items and the values. So these are nowhere related with any real business. The core idea is to make you get familiar with preparation of a trading account and ascertain the gross profit. First, I show you the format of a trading account. So let us say we are preparing a trading account for Mrs. Ria, that is, then we title this as trading account of Mrs. Ria for the year ended 31st March 2020. So this will be the heading of our trading account, and this will have a debit side and a credit side. Now we'll split this into two parts. On your debit side, we write all the direct expenses plus purchases plus your opening stock. On the credit side, we'll write the sales, that is revenue from operations and closing stock if any. Now we further divide this into three parts. So one, we write this for a particulars and amount in rupees and amount in rupees, and here again we'll have a particulars and then we'll have a amount in rupees and rupees. So this we call as inner column, and this is outer column. Why we should have inner column and outer column is if you have to make any corrections or there is any adjustments, we'll make in a inner column and we put that in a outer column. So you don't need to write inner column and outer column, just as I'm explaining you, I wrote this here. So what is that we have to do is, first when we have a transactions here, each transaction we need to identify whether this goes to the debit side or a credit side. Now you have a sales is shown in a trading account and onto the credit side. Opening stock is into a trading account and onto the debit side, because opening stock is a stock that you have at the beginning of the period and which we sold this during the year to generate our sales. Next, purchases is the direct expense that we incurred to purchase the goods during this year. So this is a trading account and debit side. Purchase returns, this also in a trading account, we deduct this from purchases. So when you are entering a purchases, you put a mark here saying that this has got some adjustment to be made. Then sales returns, on the credit side we have to deduct this from our sales. So trading account, so for sales also you make a mark here, that means sales has some adjustment. So carriage on purchases is a direct expense, so trading account and debit side. Carriage on sales is an indirect expense, so this will not have any place in our trading account. This is shown in a profit and loss account. Now factory rent is a direct expense, so we'll show in a trading account and on a debit side. Printing and stationery is an indirect expenditure, so it has no place in our trading account. And then dock and clearing charges, this is a direct expense, so this is in a trading account and onto the debit side. Freight and octroi is the charges that you pay when you import goods or when you move goods from one place to other place. So this is your direct expense. So trading account, and as this is expenditure, so we put on a debit side. Coal, gas and water, again direct expense, trading account, debit side. Discount received is a part of your other income, so which is will not consider in your trading account. So we'll start with our sales. So you have a sales here, and as sales has an adjustment, we'll write this in an inner column. So 75 lakhs is the sales. Then you have a sales returns. So this less returns, and how much is the returns amount? Here you have a 3 lakhs. So 3 lakhs is the sales returns. So your net sales will be 72 lakhs. Then next, what is it we have? We have a opening stock. Opening stock, how much is the opening stock? We have 6 lakhs. As there is no adjustment for this, directly we write this in a outer column. Then I have a purchases. Purchases has a correction or a change, that is 30 lakhs, and there is a returns, less returns for your purchases. How much amount? Here we have a returns 2 lakhs. So 2 lakhs. This gives you 28 lakhs. Then you made an entry for your sales, opening stock, purchases, purchase returns, and as well as the sales returns also. 5 entries has already been made. Next is carriage on purchases, debit side. So we can simply say that carriage, there is a no adjustment is here. So directly we take 1,20,000. This is also entered. No carriage on sales will not enter. Then factory rent 1,80,000. Factory rent, directly we take here 1,80,000. So we enter factory rent also. Printing and stationery is not shown in a trading account. Then dock and clearing charges. Dock charges, what is the amount? 4,80,000. So we'll show 4,80,000. Then freight and octroi. So here you have a freight charges. We'll take a freight 65,000. Then coal and gas. So we'll take a coal and gas. Amount is 1 lakh. We'll take the 1 lakh here. So we need to check whether we posted all the entries or not. So which are not into carriage on sales is not there. Carriage on purchase we made, this is not there. So discount receipt is also not there. So we posted all. Then what is that you need to do is you have to check on which side you have a highest balance. So by orally looking at 72 lakhs is here, 28 plus 6, 34, 38, 40. So roughly we have a 72 lakhs which is higher on our sales side. So we'll balance this one. So this is 72 lakhs. We close the account, that is by drawing a 2 lines, and we'll come here. Here also we write the same 72 lakhs and close the account. So the difference between the 72 lakhs of a credit balance minus your all expenses are your gross profit. So to calculate our gross profit, we use a formula calculator here. So 72 lakhs is our net sales. This minus 6 lakhs is the opening stock, minus 28 lakhs are our purchases, minus 1,20,000, minus 1,80,000, minus 4,80,000, minus 65,000 minus 1 lakh. So this gives you 28,55,000 is your gross profit. So 28,55,000 is the gross profit. Now what is that we do is we will carry forward this gross profit or brought down to gross profit to the profit and loss account, like gross profit brought down. So 28,55,000. So this will be your profit and loss account. So this is how you need to calculate your gross profit. Now I have another example. We quickly solve this one. So without taking much time, we simply draw a format. So here is the format. This is onto your debit side and this is onto your credit side. Debit side, all expenses, that is direct expenses, and credit side, all your operating income. I am not giving a format here. So you have opening stock. Already we know opening stock will write here 30,000. Then you have a purchases. Then check whether you have any returns. So there are no returns. So we take a purchases 1,10,000. Then sales onto credit side 2,50,000. Then wages is a direct expense, so 23,000. Then carriage inwards, so purchase, there is a carriage inwards, direct expense, carriage inwards 3,000. Salaries goes to profit and loss account, so we will not make enter here. Then coke or coal and coke 2,000. Then the prepaid wages is an asset, so this is not shown here, it's shown in the balance sheet. Then rates and taxes, this again shown in a profit and loss account. Your trade expenses here, trade expenses 4,000. Then trade expenses outstanding, this is amount which is due, which we show in a balance sheet, not here. Then gas and water, this is a direct expenditure, so we'll show here. Then closing stock, we'll show the closing stock as 15,000. Then interest received is other income, so we'll not show here, we'll show this in a profit and loss account. So we made all the entries. Then once you are done with making all the entries, balance the account. So look at the highest value. So here we see the highest value 2,65,000. Close the account here and 2,65,000 here. Now calculate the gross profit. So your gross profit is, we'll make an calculation here. So 2,65,000 minus 30,000 minus 1,10,000 minus 23,000 minus 3,000 minus 2,000 minus 4,000 minus 1,200. So this gives you 91,800. So 91,800 is your gross profit. So this is how you need to calculate your trading account. One is that in case of a trading account, on your debit side, we write opening stock, purchases and all direct expenses. Onto the credit side, we write operating income and closing stock. So if your operating income is in excess of your direct expenses or cost of goods sold, then you are assigned a gross profit. Otherwise, you are incurred a gross loss. Thank you. Thank you for watching this lecture on trading account. In my next lecture, I am going to explain you how to determine net profit by using a profit and loss account.